General Electric, the nation's largest industrial company, reported better than expected profits in the face of a strong dollar and weak oil prices. And the results come just 1 week after unveiling its plans to dramatically shrink its finance business. Shares of GE started the day higher, but were unable to hold on to those gains by the close. It ended slightly lower. Mary Thompson has more.
While General Electric's first quarter profits declined from a year ago, CEO Jeff Immelt's team kept a tight rein on expenses, driving a bottom-line beat.
GE had a good quarter in a slow growth and volatile environment. We're seeing the world that we planned for.
GE does business in over 170 countries, so the stronger dollar trimmed almost $1 billion from the company's revenue, while expense controls and strong performances by businesses making jet engines and locomotives fueled earnings that, excluding a charge to shrink GE Capital, beat estimates by a penny.
You saw gross margins expand, you saw operating margins expand, and it's because they're on this $1 billion a year simplification program.
Squeezing out costs is one reason GE sees industrial profits tracking at the high end of earlier guidance for this year, along with above-trend results in its aviation business. This despite GE maintaining profits in its oil and gas business, once a growth driver, will decline by as much as 5% this year. Oil prices cutting into the unit's orders, so GE's cutting the unit's expenses by $600 million. The first quarter results a testament to GE's ability to drive efficiencies in its industrial businesses, which it says will generate 90% of its profits by 2018, all part of a new strategy to exit most of its finance business by selling billions in assets over the next 2 years. It's also the latest makeover by Immelt. One analyst, Steve Winokur, sees achieving the goal of creating an easier story for Immelt to sell, that of a high-growth industrial firm.
The portfolio change, the cultural change you're seeing coming out in the actual costs every quarter, these are all indicative of truly, I think, a company that is transforming, that is very different today than it has been over the last 15 years.
And with the stock down over 50% in the past 15 years, investors hope that difference generates a different return. For Nightly Business Report, I'm Mary Thompson.